Hey, how's it going, everyone? So, welcome to another episode of Mortgage Monday. I have here with me my great friend Alex Castillo from Alex's Mortgage Team, and today
Good
we're going
morning.
to talk about. Oh, sorry.
Good morning.
Today, today we're going to talk about mortgage myths. So, Alex, in your time of doing mortgage loans and all this, what are some of the myths that are that you see over and over again?
Wow, Jesse, there's so many of them. But I would probably say that the biggest myth is down payment. Oftentimes, clients will call me and say, I just can't qualify because I don't have the 20% to put down. I'm like, well, you don't need 20% to put down.
That's a lot of money, 20%.
Yes, and quite honestly, Jesse, probably less than 5% of my loans, the client is putting 20% down. There are all types of loans, all types of programs to help the client put a lot less down than 20%.
So what is typically the average loan, or excuse me, down payment that people need to give in order to get a loan, and the different types of loans that those are for?
A great question. But since you asked, what's the average? VA, of course, is 0 down. FHA, typically 3.5% down. Conventional, it's typically 5%, but you can do conventional as low as 3% down, Jesse.
Oh, what's the difference between the 5% and the 3%? Like, what qualifies you to do 3%?
Well, conventional has what's called some first-time home buyer programs that allows you to put 3% down, but that's not necessarily set in stone. So it just really depends. We try to create a program that's best for the client and their situation.
Okay, awesome. When people talk about first-time home buyer, like I was stationed in Florida, and I bought a home there, and some people, I guess, and I want to touch on this real quick, is they have the misconception like I bought a home then, and now I'm not a first-time home buyer, but according to the rules, I am a first-time home buyer.
Great question. Yes. So the rule is this: if you have not actually paid any type of mortgage or interest on a home for the last 3 years, you are eligible for what's called first-time homebuyer programs.
That's really great to clear up, because there are some people that are like, well, I'm not a first-time home buyer. I bought a home, and that's one of the follow-up questions that I have is, how long ago was that? So that's great. So so we don't need a full 20% down.
Correct.
Now there are some instances where you do need 20% down. Which ones are those?
Well, you could actually put 20% down on any type of loan, Jesse. But again, it's more important to meet with the client and find those particular needs and wants, and just find the right program for that client.
I think where I was going is investors. If you're wanting to buy an investment property.
Investment property.
Because I think that's where people get it mixed up. They're like, oh, so-and-so put 20% down. Well, that's required for investors.
Yes, absolutely. There are some programs where you could put down as little as 15%, but quite honestly, when it comes to investor programs, the more you put down, the better your rate's going to be.
Yeah, and there's a whole bunch of other stuff that we'll cover in some other time. But
absolutely.
Benefits to putting 20% down. And the next one is a credit score. Oh, I don't have a pristine credit score.
Okay.
I have credit issues.
Okay.
Talk to us about credit scores.
Yes, that's a great question. There's a lot of myths out there. It's two misnomers. Number one, lenders have specific minimum requirements when it comes to purchasing a home. Some lenders' basic credit score varies, okay? You just have to get with the lender that has some aggressive programs. For example, we could do loans all the way down to a 580 credit score. However, I do want to add this: just because you have a 580 credit score doesn't necessarily mean you automatically get approved for a home loan, okay? There are some times where you can even have a 700 credit score and not qualify, but it's not because of ourselves. It's because there are specific rules and regulations that Fannie Mae or Freddie Mac require, which might not make you eligible to purchase a home. So again, you just have to work with an experienced loan officer, an experienced team to make sure that you don't get into something that you're not required to do or have to get into.
So yeah, definitely the different guidelines for different loan programs.
True statement.
And you touch on something that a lot of people probably don't know what you're talking about.
Okay.
Fannie Mae and Freddie Mac.
Yes. Basically what happens is those are insurance, basically they're backing your note. So depending on which program you go with, you're going to have the backing of Fannie Mae or Freddie Mac, and even possibly the Veterans Administration that can back your loan.
So just so you're clear on that.
Yes.
So that's great. Another thing that always comes up, or that sometimes comes up, it comes out more than not, is I'm working with the buyer. And throughout the loan process or throughout the buying process, there's different steps to a loan approval process, if you would. Kind of, if you could, like, okay, so I'll make the statement. I've had a client that was like, well, I already qualified the first day I talked to Alex, right? And then we're 3 weeks into it, and you have to, and don't wait this long to give documents, but you're giving documents, and then they're verifying and all that. And they're like, well, why do I have to give you documents? I was already pre-approved. Tell us about the process.
Yeah, great question. That comes up quite a bit. I will start by saying this. There's tons of paperwork that are going to be required for you to get a home. And the reason is because honestly, somebody's going to be lending you a lot of money so you can purchase a home. Yeah. However, when you start actually dissecting it, it really isn't that bad. But to answer your question, Jesse, because I do get that all the time, I get clients that are frustrated with some of the big box banks because they said, well, I was pre-qualified. And then when they started asking me for documentation, I was asking them why, and they really couldn't clarify that. Let me explain the difference between pre-qualification and pre-approval. Basically what happens, a loan officer is going to pull your credit. They're going to ask you how much do you make a month. They're going to ask you, your debts. They're going to go over your debts with you, and they're going to calculate what's called your debt to income ratios. Basically, all that is we're taking your debt, including your potential house mortgage, divided by your gross monthly income. Okay, so that's verbal. We call that pre-qualification. Pre-approval, just like Jesse alluded to, is we're going to ask you for your documents, 2 years worth of tax returns, 2 months worth of pay stubs, bank statements to make sure you can afford the down payment. And then once we dissect that, because it's amazing how many times clients tell me I make X amount, and then after we look at the documentation, we say, no, you really didn't, you made X amount. So the difference is basically we're going to take your paperwork, we're going to dissect it, we're going to rerun the numbers exactly the way your W-2s, your tax returns, fall into place, and then we're going to make sure you are pre-approved. That's when you should start looking for a home. If you're working with an agent that's letting you go look at houses before doing that, I would highly recommend that you fire them immediately and give this man a call. One of the hardest working real estate agents in San Antonio.
Well, don't fire them just yet, but
sorry.
Yeah, definitely make sure that you're approved or pre-approved to go look at those homes. So yeah, think about it. Have you ever lied about how much you make? You're dating and you're like, yeah, I make 80 grand, right? And you make 50. Not that I've done that, but anyway.
Okay.
Yeah. So making sure, somebody, a bank is lending you a ton of money. The average sales price of a home in San Antonio today is $257,000. That's a lot of money.
Great information.
They're gonna do their due diligence and make sure that what you said on the phone is now matching up with your documentation. So yeah, it is a process. Do we even dare dip into underwriting?
We can, because there's another thing that you're bringing up a great point. When the loan officer gets your information, if you're working with an experienced loan officer, they can tell whether you're going to be able to get approved or not, okay? We also have what's called an AUS, which stands for Automated Underwriting System, okay? It's an approval process where we basically take all your information, we put it into a system, automated underwriting system, and it spits out an approval or a decline, okay? So that's really, really important that you're working with a loan officer that gives you that AUS approval, okay? Then what's going to happen is a loan officer and his team is going to submit this to an underwriter. That's when you got a Fannie Mae or Freddie Mac or a VA approved underwriter who's going to stamp their approval on your loan.
Awesome. That's the way I kind of explain it. I always say, well, we do it verbally, they check documents, but now they're getting into the nitty gritty because they're about to sign that check for you to go and purchase your house. So that's great information. Awesome. Thank you for being here. So these are only 3 myths. Wow. I know there's a lot of them out there, and you probably have some rattling around in your head about buying a home. If you think you're ready to buy a home, or maybe you don't think you're ready, but you have some of those in the real estate business, we call it a drunk monkey. They're talking to you saying, oh, you don't qualify, or no, you can't do that, or oh, you're not worthy of it. You are worthy of it. But hey, I can't tell you that for sure. Have somebody run your credit, look through that stuff, and then decide whether you're ready now, or we need to do some tweaks and adjustments to get you ready in the next 3 months, 5 months, 6 months. So those are only 3, but if you've heard of any, do me a favor and put some comments down below and say, hey, Jesse, this is a myth that I've heard. Can you myth busted, right? Like the show. So anyway, again, thanks for coming, Alex. If somebody wants to get a hold of you and they want to, discover a little bit more, or,
Sure, absolutely.
do a one-on-one session with you.
Yeah, absolutely. Alex Castillo, 210-669-5858. And absolutely the information Jesse's giving you is very important. One thing I'd like to add, if you don't mind, is folks, it doesn't cost you a thing, okay? Jesse's services are free. My services are free to get started. So when it comes to fees, yes, a loan officer will discuss that. But guys, just to see if you're qualified, there's no cost involved, okay? So
Great
give us a call.
Yeah, we work for free. No, we don't work for free. But anyway, the process is free when you start. No, that kind of threw me for a little bit. That's good.
Sorry.
No, we'll talk about realtors' commissions and all that stuff later. But if you're a home buyer, you pay zero. All right.
Home buyers pay zero.
Awesome. Great job. Thanks again for the information.
Sure, absolutely.
If you have any questions and you want to talk to this guy, my number is 210-870-0296. I'll see you next week on the next episode of Mortgage Monday.
Thank you.